In the ever-evolving world of electric vehicles, there's always a buzz, a shift, a move that keeps investors on their toes. Today, we're diving deep into the recent movements of NIO Inc., a prominent EV player in China. Why has its stock been trading lower? And what does this mean for potential investors? Let's unravel the story. Alright, let's take a look at the news. NIO Inc., a major electric vehicle manufacturer, has seen its shares trading lower, with a decline of nearly 3% on Monday. This downward trend is not isolated to NIO alone. Several EV makers in China are feeling the heat, especially after Tesla, a major competitor, decided to slash its prices in the Chinese market. Specifically, Tesla reduced the price of its Model Y vehicle by over $1,900. Not just that, they've also introduced a limited-time insurance subsidy for some of their Model 3 variants. Now, why is this significant? Lower Tesla prices exert pressure on other EV makers, like NIO, to remain competitive in terms of cost. If they don't adjust, they risk losing a share of the market. Furthermore, these cost cuts by Tesla might be indicative of weakening economic conditions leading to a decrease in demand. It's a ripple effect. When a giant like Tesla makes a move, the waves are felt throughout the industry. But there's more to the story. Recent data from China paints a concerning picture for its economy. Reports from the National Bureau of Statistics indicate that retail sales, industrial output, and broader investments are growing at a slower pace than anticipated. This slowdown has prompted China's central bank to implement multiple interest rate cuts as a countermeasure to the economic weakness. Amidst all this, there's a silver lining for NIO. According to a tweet from National Business Daily, NIO Hardware's vice president, Bai Jian, mentioned that some of the company's self-developed chips are on track to be mass-produced in the upcoming 1 to 2 years. This is a significant development, as these chips could potentially give NIO an edge in the competitive EV market. However, the immediate impact on NIO's stock price is evident. Over the last 5 trading sessions, NIO shares have plummeted by more than 11%. At the time of the article's publication, the stock was trading at $12.31. Now, let's discuss the potential impacts of this news on NIO's stock price. The immediate reaction of the market to Tesla's price cuts and the weakening Chinese economy has been negative for NIO. But it's essential to look beyond the immediate horizon. NIO's announcement about the mass production of its self-developed chips could be a game-changer. If these chips offer superior performance or cost benefits, they could position NIO as a technological leader in the EV space, potentially driving up its stock value in the long run. However, in the short term, the company will need to navigate the challenges posed by Tesla's aggressive pricing and the broader economic slowdown in China. Now, let's discuss the upcoming trading session's surge signals for NIO stock. The upward surge signals are $12.26, $12.70, and $13.05, while the downward ones are $11.47, $11.12, and $10.68. What do these numbers mean? These are the critical price points that could confirm a directional move for the stock. If the stock approaches or breaches these levels, it could indicate a potential trend. For instance, if NIO's stock price crosses the $12.26 mark, it could be a sign of an upward momentum, possibly leading to the next levels of $12.70 and $13.05. Conversely, if the stock drops below $11.47, it might continue its downward trajectory, potentially reaching $11.12 or even $10.68. Investors should keep a close eye on these signals as they can provide valuable insights into the stock's potential movements. That wraps up our deep dive into NIO's recent stock movements and the broader context influencing it. If you found this analysis insightful, please give this video a thumbs up, subscribe for more updates, and let us know in the comments, how do you think NIO will navigate the challenges ahead? Your insights and discussions enrich our community. Until next time, happy trading!